Okay, thank you. Again, my name is Jeff Wood, with HomeStreet Bank. I'm a loan officer at HomeStreet for the last 21 years. Joining us is Nicole. She's a realist and she's part of our program that we offer, for having our real estate agents joining with our program and kind of contributing to it as well. And it's kind of a first or second video with one of our agents to kind of go over some of the information to kind of give their expertise in it as well. So I'm going to welcome Nicole as well. And so she'll pop in and kind of talk about her side of it a little bit throughout the process of buying a home. So we'll go through this. We'll try to make it about 45 minutes and then questions for about the last 5 minutes. And then we'll also have Nicole's information and my information at the end as well. So thank you again for joining. So today what we're going to do is we're going to talk about the benefits of home ownership. Why do we want to buy homes? Why do we want to own our own real estate? And so we're going to talk about the benefits, and then kind of the basics on what you need to do to get started for buying a home for first-time home buyers, or if you've bought a home before, maybe you need a refresher. And then we're going to talk about buying a home, establishing your team. And then last, we'll talk about the benefits in our program and kind of what you can get from HomeStreet, and what you can get from our real estate agents and Nicole, and what they can contribute to the program as well. So I'll talk about the first part, and it's just the benefits of home ownership. Again, why is it important to own a home? So the first part is home equity. Home equity, what is it? It's the positive difference between the fair market value of your house and any outstanding balances that you owe on a first or second mortgage. So it's the equity that's basically the ownership, the kind of the savings part of owning the home ownership, that it grows over time. So the longer you own it, a lot more equity builds up throughout the years. So that's where you see a lot of times when the market's not doing so well, people are sitting there flipping homes because they want to guess the market. They want to try and sell and make a lot of money. Well, equity is usually built up over time. It's not something that get rich quick schemes and things like that. So that's one thing with home ownership. You want to get into the house, you want to build your equity, you want to stay in the home, and kind of stave off inflation basically, and try and kind of keep your payment the same while prices may go up in other areas. So a few ways for home equity to grow is proper home maintenance. So keeping your house in good working order. So you want to make sure you're keeping up on home improvements and maintenance of the house. Things aren't being forgotten about. So neighborhoods, also improving your neighborhood. A lot of times, if the pride and ownership with your entire neighborhood can help bring in a lot more equity for your house. Market conditions, again, supply and demand. And with this market, there's still a lot of demand and not enough supply. So with market conditions, a lot of times it can dictate with how much equity you can build up in the house. So, and then decreasing the amount you owe on your house. So if you pay your first mortgage down, getting down quite low on your first mortgage and your value keeps going up, that's one great way of building up equity.
And I'll share too, from the real estate perspective. And again, I'm Nicole Bascom. I'm the owner and designated broker of Bascom Real Estate Group. The things that equity can do for you. You know, it can pay off your debt. It can buy other properties. If you want to grow your investment portfolio and you want to buy more properties, people use their homes to do that. Start a business, put kids through school. There's so many benefits to home equity, and that having a home and building that equity over time are many of the great benefits that you get from owning a property. So I just wanted to share that as well.
Thank you, Nicole. That's perfect info. So the next part, we'll talk about other benefits as building your credit. So 35% of your credit score is off of your payment history. So it's a hierarchy of payments. So typically your mortgage payment, your car payments, the larger payments, the installment loans give you a higher proportion of your credit history. So owning the home, making the payments on it gives you a lot higher credit scores by having the house, having the car payments, and making those payments on time. Conversely, if you make late payments on your house and your cars, your scores go down a lot faster. So having your house, your car, those are two of the first things you want to make sure your payments are up to date on. The next part is the amount of debt you have. 30% is based on the amount of debt you have. So if you have too much debt, your scores can be reduced quite a bit. So one way to combat that is reducing credit card spending, keeping it at 25% of your balance, of your high balance. So there's ways of getting that score up if you need to, but reducing debt does help quite a bit. So you don't have a ton out there. Also, possible tax deductions when you buy a home. Some of the costs may be tax deductible, mortgage interest, property taxes, maybe mortgage insurance. There's different things that can be tax deductible with the house, but check with your CPA or your tax advisor. So check with them on that. Next part is kind of the fixed rate mortgages. So with a mortgage, you can get the stability with, you know what your payment's going to be. The only things that change on your payment typically is your homeowner's insurance and your property taxes. So those two things can change. If you have HOA dues, if you're in a condo, HOA dues can go up if the building needs to, if they do an assessment or something. So you can have increase in HOA dues as well, but typically your fixed rate mortgage, your principal and interest will stay the same. If it's a 30-year fixed, 20-year fixed, 15-year fixed, you know what your payment's going to be for the next 15 to 30 years. So you know that. Predictability. So when you're setting up your budget, you know what that budget's going to be. So, and again, right now, interest rates are high, higher than what we were and we're used to in the last 5 to 6 years. So yes, 6.5 does seem high. When I got started, it was even higher than that. So, and that was 25 years ago. So 6.5, yes, it's higher than what we're used to. It does make a lot larger payments right now. So you just kind of have to kind of go with the ebb and flow with some of the rates and kind of what the price is. So, but right now, so we with the rates, there's still quite a bit of demand even with the higher interest rates. But you're seeing less houses for sale because no one wants to get rid of their 2.5 or 3.5 interest rates. So, they want us to touch a little bit about adjustable rate mortgages on here, or ARMs. You hear some lenders talk about ARMs. Adjustable rate mortgages is the ARMs is the acronym for it. But common type ARMs that we have are 5/1 ARMs, so it's fixed for 5 years. It'll change every year after that. What's become more common is the 5/6 ARM, where it's fixed for 5 years, but it will adjust every 6 months after that. But you'll see those in increments of 3, 7, 3, 5, 7, and 10-year fixed. Usually a 10-year fixed is about the same as a 30-year fixed. I don't do too many 10-year fixed because of that. But 5 and 7-year ARMs, usually you see those are a little better than a 30-year fixed. So if you know you're going to be in the house or that mortgage for a short term, maybe a 3 or 7-year ARM, 3 to 7-year ARM might make sense. And loan officers can talk to you about that as well. Just kind of give you an idea of what the payment would be for one over the other. I know lately the ARMs have been about the same as a 30-year fix, so it hasn't been really something to chase after. It just depends on which lender you talk to as well. Let's see. Next part is freedom. Buying a home, you have kind of your own privacy. You have your own personal space. You have your reflection area. You can paint and decorate as you like within means. If you have HOAs in your neighborhood or your condo association, you may have some restrictions. So you do want to check it's called CC&Rs before you buy into into that neighborhood or that condo complex. So they may have, typically with homes, you don't have pet restrictions unless again, it's a condo. Communities, you build your neighborhoods up with the community, you build strong relationships with your neighbors because you both own the home. So typically you have stronger communities with home ownership. They show the pride of ownership that reflects throughout the neighborhood. If you have a lot of owner occupied homes, let's see, and then surrounding amenities within the community. So if you have playgrounds or parks, just sidewalks, landscaping, just different things within your community can really make the neighborhood a lot stronger. Just showing with again the pride of home ownership.
Sorry, go ahead, Jeff.
Oh no, go ahead. I was just gonna pass it on to you, Nicole.
Oh yeah, I also wanted to share the personal benefits. Studies show that people who own homes are healthier. Children who live in homes where their parents own them are typically have a higher education attainment. They do some type of secondary education, whether it's trade or college or some kind of postgraduate, undergraduate, well, excuse me, post-secondary education. Folks are more civic minded and overall just have a better experience when they're homeowners. So there's so many different benefits to homeownership that are not just those tangible things, but things that help to support you as an individual as well.
Thank you. So we'll go in the next part. And then the last one is just retirement. Knowing when your mortgage will be paid off is very helpful. Or if you know that you're going to be downsizing, let's say you want to go on from your larger house with you had five in your family and you're going to go down just to two of you. Or if it's four of you and you're going to go down to one in retirement, you could reduce your expenditures. You can maybe buy a house free and clear with the equity of your old house. But you know what your expenses are going to be if there's no mortgage payment. You're just going to have your house expenses, your HOAs, your insurance, your utilities, taxes, and then repairs and costs of the home as well. So that's one nice part about retirement. You can kind of choose when to get your house paid off if you can. But then again, if you have your equity and you want to sell the home, you could use that to downsize as well. So I see that a lot with my customers through the years, that they've got the house, they're ready to pay it off. Then they're going to buy the second home, or they're going to buy the retirement house. And then that's where they're going to go live in once they sell their current house. I'm seeing that quite a bit right now. So did you want to add anything to that, Nicole?
No, I agree. You know, folks, there's homeownership typically was your retirement plan, right? Using that, selling it when you retire, family leaves, using that equity that you gained. I've had clients where I've sold their homes where they lived there 30, 40 years, owned it free and clear, and made 100 times what they purchased it for. And now they're, into retirement and doing other things. So it's just a great benefit overall. And this is one of them, into your retirement, and then understanding what your costs are going to be. We know that when your retirement changes for a lot of people, especially working folks who maybe have a 401k, or we don't see this very much anymore, but pensions and retirement, you're on a fixed income when you're retired for the most part. So having that ability to understand your expenses after retirement is really helpful from a homeownership perspective.
Okay. And then now what we'll talk about next is kind of the home buyer basics, and just kind of go over what you need to get the first steps of buying a home and kind of figure out what we need to do to get you set up. So the first one is create a budget. So we have different, we have a management plan at HomeStreet. We can have the link right there, but there's like 20 to 30 different apps that you can do to track your money, from Mint to different programs that go online and check your like Quicken and things like that. You can check your money, where your money's going, and setting up budgets with your family. And so that's a big thing you want to do, is figure out what you want to afford monthly. You want to include everything you can within that payment, and also within your budget, figure out what you want for that budget per month. And so a lot of times what I do is talk to customers about, what are you paying currently in rent? What do you expect to pay in a mortgage? Start putting that away as savings. It's called payment shock. And so if you have a $2,000 a month rent and you want to bump that mortgage payment up to $3,200 to pay for the mortgage, start saving that $1,200 and put that $1,200 every month in your budget into your savings, and see if you can live without running your credit cards up, without making any withdrawals from that savings. And you can build your savings up at the same time that you're seeing, okay, does $3,200 a month make sense for my payment, or do I need to dial that back? So with the payment shock, it's a great way to kind of figure out how to get savings built up, and also, can I live the normal life that I like to live, where I go camping, I go on trips, I go do things with my family, I go to the movies, we go to dinner once a week, things like that. So it it reminds me back in 06 and 07, when I had a lot of customers that were like, when we did surveys after they bought the house, they just pushed and pushed and pushed to get into the house. They didn't budget, and a lot of the surveys would come back saying, I'm house poor, all I can do is make my mortgage payment. So you want to get that budget and live life, but also make sure it's set up to where you're not just living to pay that mortgage. So that's a huge thing when you're setting up the first steps from budgeting and savings. So go to the next part here. And so we kind of talked about the credit a little bit, but the main thing is just watch your credit. You want to make sure you know where your credit scores are. You can have a free credit pull once a year. So if you have your credit check, you won't get the scores, but you can have um, uh, and I'm blanking on the resource real quick, but you can have your credit checked once a year, and they'll give you what your credit is once a year, and then but this is just kind of a breakdown of what your credit score is based off. Again, a payment history, the amount you owe, how long you've been using credit, new applications for credit, and the types of credit used. So one thing I hear a lot from customers is like they don't want to apply because they don't want their credit pulled. When you have when you're shopping for something like a car or a mortgage, you have a 45-day window to have your credit pulled by those creditors. So if you had 2 or 3 creditors pull your credit to buy a house, your scores will not drop. I've had some customers that don't want to apply because the other lender told them you can't apply with other people because your scores are going to drop too low. So you have that 45-day window, you can have your credit pulled, they can check it, you can shop with your mortgage lender, you can see, okay, this is what we're approved for. Your scores are not going to change. So they should be fine. Again, going out and check, as long as you don't go out and say, oh, I'm going to go shopping for a car, apply for credit cards, and shop for a mortgage at the same time, that will drop your score. So shopping for the home mortgage keeps your credit score within the same scores for that 45-day window. Next steps, applying for the home loan. So once you've done your budgeting, once you figure it out, this is what I want. This is what my payment's going to be. We submit our loan application with the loan officer. We typically need 2 pay stubs. It says 1 month recent pay stubs, but if you're paid like a teacher or Fred Hutch, there's a few companies out there that pay once a month. We do need 2 pay stubs for those employees, but typically it's 2 months. If you're paid weekly, we need 4. So it just depends on what frequency you get your paychecks. And then 2 months recent bank statements or investment accounts where your down payment is coming from, where closing costs are coming from. If you have a gift, we don't need that info right now. Just let us know you're getting 20,000 from a parent. You're getting 100,000 from a parent. You're getting help with closing costs from a parent. You can tell us that, and we can work on doing the gift information later. We can still do the approval saying, okay, we know 5,000 is coming in for closing costs. And then 2 years, most recent W-2s. Sometimes we need federal tax returns for 2 years, depending on the type of income you receive. So if you have bonus income, commission, restricted stock units, there's different things that we use that we have to use a 2-year average on. So tax returns might be needed for that to show that you have a 2-year average for those incomes. So those are the main things we need for the pre-approval. It's pretty simple. And then we can get that done. Then your pre-approval is good for 90 days. And we can keep that approval up and running as well. We don't always pull the credit every 90 days to 120 days. We will wait to pull the credit as long as nothing changes on that credit report. Next part, we'll talk about just go into buying a home. And this part, Nicole, will kind of help as well, but we want to establish a team. So the first thing you want to do is get the pre-approval. Again, get a pre-qualification. Mainly what we're doing is we're checking everything with your income, your assets, credit report, everything we put into a system as if you're buying a house, and qualify you for that house with that said down payment to see if everything works right. If it's not quite there, we have to lower the loan amount, or maybe you can increase the loan amount a little bit. We just want to figure out. That's why the budget makes sense, knowing, okay, I can have a $3,200 payment. We can base that $3,200 payment on this loan and your down payment. And so we layer that up, figuring here's your loan, here's your down payment, this is your purchase price. So we kind of do that, figure out this is what you want, and kind of give you a kind of a blueprint of what type of house and what your payment's going to be with this said purchase. So that's when we kind of hand it off and say, okay, here's our real estate broker. This is who we work with. Or if you're working with a real estate broker, we kind of give them the information and send over the approval letter. And then sometimes I get it backwards as well, because sometimes I have the agent already being picked before they come to the loan officer, because it's very easy to go out and look at homes, especially with the internet. But I'll let Nicole talk about the real estate side of it.
Yeah, absolutely. And I did want to share that down payment perspective. Washington is a state that has a lot of down payment resources, a lot of down payment assistance to help those who maybe you don't have that 3% down payment or 5 or 10 or 20. There are some great down payment assistance programs, specifically the Washington State Housing Finance Commission bond. It really, the only minimum is you can't make more than $180,000 in your household. If you don't exceed that, you can get down payment assistance, and you don't have to be a first-time buyer. So I did want to share that from the down payment perspective. Is there's a lot of support around that, as well as when you're shopping for the property. So as a real estate broker, that is someone, but your lender and your broker are going to be your best friends during the home buying process. And me as a broker, I work very closely with the lender of my clients, because we have to stay in communication, to Jeff's point, because there's so much happening with pre-approval and information sharing, but things happen really quickly sometimes. So when you engage with a real estate broker, I would definitely say interview a few. We're not all created equal. And so you want to make sure you have the right real estate broker, because there can be challenges with these offers where you want to make sure you're working with someone who knows what they're doing. So we're viewing properties, and I would say that typically I don't allow my clients to view properties until we have a pre-approval, because what it does is it sets an expectation that we don't really know what we're working with yet. If you haven't worked with Jeff or a loan officer and you've gotten pre-approved and you don't know what you're working with, sometimes it can really hamper the process if you have expectations set and then you're looking at homes, let's say for instance, 800,000, and Jeff says you only qualify for 650,000. Well, that can be challenging, and it can be a very challenging piece when you're looking at properties when that happens. So I like to share with clients that we work very closely with the loan officer and ensure that we have all your pieces in place to make sure that when we go see that property, you might say, hey, Nicole, we like this property. We want to put an offer on it. Well, I want to make sure I have a pre-approval in hand to put that offer together, because nowadays, most listing brokers, so brokers on the other side who are listing it for the seller, they won't accept an offer without a pre-approval. And that's just the market that we live in right now. But it's best for you as a buyer to have your pre-approval so you are confident when you are property shopping. So typically, as the bullets here show, we view properties, you decide you like one, we put in an offer, there's negotiation back and forth sometimes around that offer. If the seller accepts your offer, I then submit the offer signed around to Jeff, he's your loan officer, and then we work together to get the deal closed. There are a lot of moving pieces around that. Sometimes closings are smooth, sometimes they're not so smooth. That's another reason why it's important to Jeff's laughing, because he knows they can be very challenging.
Or stressful, yes.
Very stressful, but if you're working with the right people, we can get you through that. And so it's really important that you have the right team to ensure that you're getting into your house and make sure you're staying in that house and enjoying it. So we work together very closely to ensure that you, as the home buyer, are having your needs met, and the expectation is been met for you as well.
And one note I want to add with the loan pre-approval, one other step that I like to do with my customers is to take it one step further and push it to an underwriter. I actually take the pay stubs, bank statements, and we send the whole full file into our underwriters, have them underwrite it as if they have that property. The main reason is because it gives that listing broker kind of an assurance that, hey, all I need is an appraisal and a title report, and this person is good. That's all we need. Sometimes we don't even need the appraisal, depending on the age of the property, because sometimes they allow us not to need an appraisal if you have a large enough down payment. So there's some things that that help. Having a right lender and having that underwriting approval can help push you over to get that deal with some customers. So that's another kind of step that I like to have my customers through, especially right now. I just sent one in yesterday. I got an approval today for an underwriting approval. So it took a day. It usually used to take a week to 2 weeks. So right now it's going really quickly, which is kind of nice. Next part is, okay, so you've done this, you've got the pre-approval, you've gone through, made offers, maybe your first couple offers weren't accepted, but now, hey, you got your offer accepted. Now what? So this is one of the biggest things I'm usually your loan officer's last to know. So let your loan officer know as soon as you get your offer accepted. The reason I say that is I cannot lock an interest rate until you have a house under contract. So as soon as you let me know, I can start running the numbers for you and say, hey, here's your interest rate. This is what we could do for your needs. So if you're going to live in the house for a while or short term, these are the best programs that we have. So we can kind of give you some different scenarios. So getting us the contract is huge, letting the loan officer know. You want to confirm any details or contingencies or escalation clauses with the realtor, so you can make sure that the contract details work with you and with what you want for your loan. Let's see, and the next part is earnest money deposit. So one thing you do need, besides maybe your home inspection money up front, one other thing you will need is earnest money deposit. So depending on the market, depending on the area, really depends on the house. But the earnest money is what you will put up for them to take the house off the market. So part of your contract, them accepting your deal, is the earnest money. Once they accept your offer, they will take that check and they will actually cash that and they'll put that in escrow. And typically it's like 1% of the purchase price. Sometimes it's more, depending on how competitive the market is. So again, the escrow company will hold those funds. It will be held until closing, until you're and used as your down payment or closing costs. So just one thing, that is money that is used, we verify that money. But once it is cashed, they do take that and put it into an escrow account. And I believe, what is it, $10,000 or more, they do have an interest-bearing account. It's not a lot, but I know they do get interest on those. So the earnest money is deposited. Then you'll want to schedule a home inspection with your agent. And then typically they'll give you 2 or 3 different choices for a home inspector. Call them all up, do that, kind of find out their expertise, find out some of the information about them. And I know, again, with home inspections, and Nicole will probably add a little bit more to this, but because I don't do a lot of that. But a lot of the older homes doing sewer scopes, I know that's becoming more of a norm, besides the regular home inspections. So, did you want to add anything to the home inspection?
Yeah, and I always tell my clients, do a home inspection. Even if it's not contingent on the offer, because you have different ways of doing it. You can put it in the offer and say, hey, seller, I want to buy your home. However, I want to get an inspection first, clear the inspection, and then move forward with buying the property. That's called an inspection contingency. Or you can do it outside of the offer. Hey, seller, I want to buy your home. I want to get an inspection, but it's not contingent on this offer. It's more of an FYI for myself. That is what is really important to get during getting a home inspection. So you know what you're walking into. It cannot tell you the future, right? You don't know what's going to happen in the future, but it can tell you the overall health of the property, and that's what you want to know. And I saw that there was a question around escrow companies. So title and escrow is a third party, non-interested third party that holds all the funds for a transaction. So the money from the lender, from HomeStreet, gets wired to the escrow to close the business. The money from the buyer gets wired to escrow to close the transaction. Escrow holds all the monies. So no one who's a party to the transaction holds any monies. So they're disinterested third party. They also provide title to the property to ensure that this property is actually sellable, lienable. There's no encumbrances on it. When you buy the property, you'll be free and clear of any legal issues from the previous buyer. That's what the title and escrow company does. And then again, they manage all of the funds for the closing of the transaction. That's why when you do provide your earnest money, it goes to the escrow company so that they hold it. And who pays the home inspection? The buyer pays the home inspection. So you as the buyer pay for the home inspection. Right now, they are between, depending on what you want to get, to Jeff's point, the sewer scopes are getting more commonplace with the older homes. You're looking at, from a condo, maybe $300 to $600, to a single family residence, maybe $500 to $800 for an inspection. It just depends on the pieces you add to it. Maybe you want to see if there's mold in the house. Maybe you want to get an exterminator in to see if there's any infestations of any kind. So a home inspection can have different pieces to it. But that's why, to Jeff's point, it's important that you call all three, because as a real estate broker, I have to provide you at least 3 home inspectors. You have to call them, because by law, I can't tell you which one to use, but you get all 3 of them a call, and based on what your budget may be around a home inspection and what it is you want to do, you'll get the right one for you. So that's how the home inspection process works. Once we get past that, typically I would say, hey, Jeff, we're past the home inspection contingency. Let's get that appraisal order. And if an appraisal is required, he would order the appraisal. The lender would do that. You do have to pay for that too. That's another fee that you have to pay up front. Typically, they ask you to provide a credit card to pay for your appraisal, because you pay for that outside of closing. And then they get the appraisal ordered. And from the buyer side, you're done. Once we get the inspection, all of that really is just a waiting game. And me as a broker working with Jeff to ensure that we're taking those next steps.
And a little bit on the appraisal, and it depends on your lender. With HomeStreet, we don't actually charge your credit card. We hold it. So if you close the loan, we shred the credit card. We never charge the appraisal. We actually will pay it, have it paid in closing costs. So that's one nice thing about our appraisal. We don't charge your credit card for it. But some banks do have you write checks to them. We don't take checks, because as a lender, or as a bank, we have to actually cash your check. So we can't hold a check. So we hold a credit card, but some banks will take a check. Some places will take credit cards and charge your credit card. So be cognizant of that. With us, we just hold it like a deposit. So, and a little
There was
bit
a question around real quick mold. So that doesn't come automatically with a home inspection. If that's something you think you might want to, this specific house is older and you think there may be an issue, you would make sure you work with a home inspector that does do mold testing, because all of them do not.
Yeah.
Not every home inspector is equipped to do that. So you would have to use one that does.
And mold abatement is even another scenario as well, that if you have to have the mold taken out, there's certain specialties for that as well.
Yeah.
It comes around once in a while, but it really depends on, especially if you have basements or crawl spaces that get wet. And then a little bit more on the appraisal. Again, appraisal is different than your home inspection. The appraisal is for the lender to send somebody out. We send a third-party appraiser out to make sure the value of the house, if you're offering at $650,000 on the house, that houses are similar within the same area, same size, are selling for $650,000. So they make sure it's within usually a mile within the last 6 months. The houses are gonna appraise with about the same with other houses selling in the area. It's not an exact science, but they do a lot of details in the information that they give us. So they usually bring up 3 to 5 different comparables, usually 5, sometimes 6 if they use a listing with a little bit less weight. But they come up with a value and make sure that your value fits within that box. And so they have kind of brackets where they have the high and the low, and they want yours to come in between typically. So most likely the houses will come in. We get a few here and there that don't. It's not too often, but it really depends on the market as well. So as long as it's not escalating too high. So, but then again, the appraisal is mainly for the investor. So whoever's investing in the loan wants to make sure that appraisal is adequate for the house and the loan that the bank is making. Okay, and now number 2, your offer is accepted. Now what? So once we've got the appraisal ordered, a lot of times you're just going to sit and wait. As a homeowner, this is usually the longest period between your final approval when you get the appraisal ordered to your final approval and signing loan documents. So you could wait 2-3 weeks depending on how long your close is. But signing the final documents usually is a day or 2 before closing. So your closing date is the date you have on the contract. So let's say it's March 28th. So you're going to close on that Friday. You're probably going to sign on the 26th or the 27th. So that's when you're signing your loan documents. Your closing is always going to be on that other date. So it's typically a few days before. So we'll let you know, but so they'll let you know what closing costs and everything will be due at escrow a day or 2 before closing, but make sure you verify you're speaking with escrow before you send any wire before you send any wire transfers. Especially if somebody's emailing you and say, oh, send us your wire transfer, and they're emailing you and it looks legit, call up the escrow company that you're going to be sending the money to and verify their wire instructions. Mainly because there's a lot of copying of emails, and you want to be careful that you're sending your wire instructions to the wrong place. It's happened. It's happened to HomeStreet customers. It's happened to a lot of customers in the Puget Sound area where they get an email and it's been spoofed from their realtor or from a lender, and they actually will say, yes, send your 5% down payment here. That's a huge red flag because they're doing they're telling you your down payment that typically with fraud, they don't know the details of the transaction. So they're trying to get your best guess to kind of fake you into sending money. So be careful before you wire money. Talk to your title or your escrow company, get the wire instructions over the phone. That will help. So what we do is we get your loan documents ready. You're going to wait. You're going to sign what's called a closing disclosure. I see they missed that on here. A closing disclosure is one of the new forms that we have to send out 3 days prior to you signing. So if you're signing on Wednesday, the 26th, we have to actually have you sign the closing disclosure, or CD. You'll hear a lot of lenders refer to it as a CD, 3 days prior to your loan consummation or signing. And so we probably send that out on Friday. And that's kind of like what the good faith estimate used to be, where it showed a whole breakdown of all your closing costs. So those closing costs are going to be what you see when you go to escrow to sign your loan document. So you know what your payment's going to be. It should be very close to what we're sending there and what you sign on Wednesday. So there shouldn't be any surprises like, oh, where'd this $5,000 money come from, or bill come from? So you're going to see that because we can't increase any of the fees within a certain limit for title and escrow, and then bank fees can't be increased at all. They have to stay the same. So you'll get that closing disclosure about 3 days before you sign. And then once we send all loan documents out on Monday or Tuesday, escrow will then say, okay, here's your final amount. You get your wiring instructions, you wire that to escrow, typically the same day as you sign. And then a couple days later, once the escrow records the ownership, we fund your loan and all the money gets dispersed by escrow. You'll get a call from your agent. So Nicole will give you a call and say, hey, let's meet. Here's your keys. That's when you're owner. Typically, it's the day that you close. I know it's 9 o'clock is possession. Sometimes you can get it before 9 o'clock. It really depends on the contract and the seller. And there are times where they do maybe rent back for a couple days because maybe they couldn't get out quick enough to get into their new home. So there's a lot of different scenarios on when you get your keys, but it's going to be written into the contract. So you'll know that. Your agent will educate you on that as well. So hopefully covered a lot. I know there might be a few more things in there, Nicole, that you'd want to cover.
No, that was pretty much it. Recording day, that's really the exciting day. Usually I stay in contact with the lender and the escrow company on closing day, because wiring, for instance, in King County, typically all closings happen by 5 p.m. Depending on whether it's a vacant home, then I can get you your keys as soon as we get the numbers. If it's someone living there, they're supposed to either be out by a certain date, usually 48 hours before the closing date, or to Jeff's points, they may be buying another property themselves, so they need a few more days to get themselves out of the house. And then I would provide keys on the day of closing, but you just wouldn't take possession until they moved out, and that date would actually be in the contract. So, again, everybody's transaction is different. And I do want to stress that, especially for some home buyers, they talk to a lot of people about the home ownership process. And I can assure you, yours is not going to be like someone else's. So everyone's process is different. Everyone's situation is different. And I always like to share that with my client. It's great to talk to other people, but the reality is your situation is probably going to be wholly different than anybody you've talked to. So it's important to work with your real estate broker and with your lender to ensure that your process is seamless and as possible.
Okay, and then we'll kind of wrap it up with, we've got some questions. We'll have some questions right here at the end, but just to kind of go over the benefits of our program, just kind of give you an idea. So the main one that you receive as a first-time home buyer or as a second-time buyer is the discount fee from HomeStreet. Typically, it's a 0.5 point towards your loan amount. So example, $600,000 loan, you get $3,000 towards closing costs. So we don't increase the interest rate. We're a non-commissioned loan officer, so we actually can pass that on without having a high commission to have to pay our salaries. Instead, we give that over to you as a buyer. We have participating real estate agents for their rebates. They can contribute part of their commission towards your closing
Compensation,
costs as well. Compensation, thank you.
yes.
Compensation towards your closing costs. So there's a portion there. So that's helpful, especially for first time home buyers getting both of those discounts. And then down payment assistance. We have a number of down payment assistance programs that we work with at HomeStreet. We go through Washington State Bond. We go through some other down payments through land trust throughout Seattle, Bainbridge Island, Kitsap County, Pierce County, Snohomish County. Each city, each county has a lot of different programs that we work with. If you have a disability, if you disabilities, if you have trying to think what the other there's about 3 or 4 that we work with there. There's for veterans, for teachers. So there's a lot of programs that we work with, or with the land trust. If you share your equity with the land trust and you're buying the house but not the land. So there's different programs that we work with. So there's a lot of different things that we can help you with in getting you into your first home. Besides the finance, and then we have financial tools and resources. We have these seminars that we do, but we also do newsletters, toolkits. We're available 6 days out of 7 to answer questions through our hotline number, Monday through Friday. It's 8 to 9 p.m. And then Saturdays it is 9 to 5. So again, the other nice part about it is the benefits are available to immediate family members. So your children, your parents, brothers, sisters, family members, they get the same discounts that you do. So they can actually take advantage of this as well. I'm starting to see a lot more of my the children of my customers buying through us, which is kind of neat. Next part, affinity benefits are only available through HomeStreet Bank Affinity Program. So I'll have the number here on the next slide, but make sure you call one of us. There's 4 of us here in the Seattle area. Ryan, Jessica, myself, and Denise, and we can help you with that. But make sure you call us because we have about 30 commission loan officers. They say they may get you the discounts, but they don't know all the discounts and all the things that we do offer. So, and then here's my information. If you have questions, I know Nicole's gonna have her information in the chat as well. I couldn't get it on the slide here. So, but my information's here. If you have any other questions or want to reach out, it's just jeff.wood@homestreet.com or my number at 264-4262. You can also look at all of the benefits for UW as well at homestreet.com/UW, or use the scan up here. It takes you right to the website. So, and then we don't really have a published list of realtors. We can't do that because of some of the laws that we have within sharing the information, because they have to pay for the website if we're helping them on the website. So we have to basically just kind of tell you who we work with in certain areas. So we don't really have a list of who we have for realtors, mainly because they won't let us put it on the website anymore. We used to, but they won't let us do it anymore. But if you ask us, if you're working with one of us, we can let you know who they are, what areas they work in. Like Nicole, you work South King County up to Seattle?
Yeah, I work from the central district, so central Seattle, kind of UW area through North Pierce County. So
okay, that's right, North Pierce.
Yeah.
Okay, and then yeah, so we have other agents that'll work, let's say UW North up through Snohomish County, or I have an agent down in Thurston County. I have somebody that works in Kitsap County, or somebody up in Skagit County. So we have a few of the counties covered with a couple different agents. We don't have a lot of agents because we want to keep it small enough they get more business through the program. That way they can give the discount. So they get a lot more business through us, but they're also passing on the discount to you as the buyer. So it's kind of a nice give and take as well.
And I would share that also with that, when you keep it small, you know that you're working with people who know what they're doing. You know, I'm very, for me, it's about education. It's about ensuring my buyers know what they're doing, not just buying a home, but they understand the process, they understand the material, they understand the information. And many of us brokers who are part of this affinity group are seasoned real estate brokers. And so we understand the process, we support our buyers through the process, and we work closely with the loan officers to ensure that your needs are met through the process.
Okay, and I see it's about home buyer seminars at our bank. We do have some home buyer seminars coming up. I know we just had one in February. I don't know if Jessica was doing one. Yeah, let's see. Move this out of here. Yeah, we just had one let's see. That one I was looking at. Yeah, we just had one on the 9th in Seattle, but I know she's going to India for about 3 weeks, and so I don't think she's gonna have one in April. That one's in Spokane. Let's see, our next one, Spokane. Looks like our next one is gonna be on, actually was that April? April, yeah, April 20th is gonna be our next one. So if you want to reach out to me, I can get that information out to you. I don't have her number handy right now, but we do have those coming up. And then with the Washington State Housing Finance Commission, they do have a list of classes as well if we need to. We can get
There
that
was
information to you, so.
There was a few questions. Under what circumstance would I have to forfeit my earnest money deposit? Typically, few ways a buyer would have to forfeit their earnest money deposit. We go through all the contingencies. Jeff's approved your loan. All the conditions have been met. Inspection passed. Appraisal came in, and you say I'm your broker. Hey, Nicole, I don't want to do this. I just don't want to do this. I decided I don't want to do this. You would lose your earnest money at that point. If it's not material to the conditions that are provided through that loan, if you just walk from the transaction, you can lose your earnest money. If you don't meet some of the conditions of the transaction, and let's say within a certain time frame, you didn't get the inspection done, but you found out the inspection contingency was supposed to be done in 5 days. For whatever reason, it didn't get done, and we didn't get it till 7 days, and you found a material issue with the property, and you said, hey, I found this issue with the property through the inspection. I want to either have the seller cure it, or I actually don't want to do this transaction. If you're outside of your contingency time, you could potentially lose your earnest money if the seller decides that that's the kind of cure they want. So they're very specific things. It's very contractually bound. It's not arbitrary, but it's very contractually bound. But really what it is about is ensuring that you as the buyer are meeting all your stipulations based on that contract. And if you don't, you could potentially lose your earnest money.
Yeah, and it's it's very rare. I've had it happen 3 times with my borrowers.
Yes,
One,
rare.
yeah, my borrower had it, her dream home came up for sale. She was ready to close on the other one, and she said, I want this house over here. So she walked away. It was like $5,000. She's like, I'm gonna buy my dream house. So that was a weird instance. Another one, a family member was hurt overseas, and they had to take their money, or basically their down payment, and go help their parent that was in a tragic accident in a different country. So she lost like $10,000 because she had to walk out. The other one, and this is the one that I usually say, don't go out if you've been pre-approved. Do not go out and buy anything until you have the keys to the house. I had a customer that didn't have a car payment. Her car broke down, so she went out and bought a brand new Land Rover, $1,200 a month payment. We got an alert that credit had been pulled, and we had to see, did you open new credit? And we have to check that. So if you are in the process, we do check credit again. If something's been pulled and you start opening up credit, we couldn't do the loan anymore. She was past her contingencies, but we got a last minute notice that she opened an account, bought a new car. We couldn't get her approved. So don't buy anything. Don't do anything. flooring or furniture, anything like that until you have the keys to the house, and your clothes. So that's one of the big things. Let's see, and then,
The contract with the real estate broker, I did put it in the chat, but now we had a new law passed where buyer's agency agreements have to be signed with brokers. Typically, it can be exclusive or non-exclusive. I would share that it's not good to work with more than one broker. You're gonna get different levels of service and different experiences. Because that person has to work with you very closely. And so you're not gonna wanna be bouncing between multiple brokers when you're buying a property. You're gonna want to choose one. You will sign a buyer agency agreement. That is state law now. You will sign that buyer's agency agreement with that broker. It could be for a certain amount of time. Maybe you say, hey, I want to try you out for 30 days. You can do that. If it doesn't work after 30 days, you can find another one. But I suggest, just like you only stick with one lender once you make a decision, stick with one broker once you make a decision, and they can support you through your home buying process.
yeah, and that's the, and don't you have to have it signed by both of you if you cancel?
Nancy Lopez Perea.
Yes, you do.
Okay, that's the other
Yes.
one. If you do cancel it, you both need to sign it. Because before I was told you used to only just have to sign it and send it in, so.
What if I sign the agreement but can't find a house? You can extend it. You know, sometimes home buying can take from 30 to 90 days. Everyone's situation is different. If you want to continue to work with that person, you would just extend it. Or if it expires, you can find another broker. If you want to cancel it midway, you can sign the cancellation and part ways from your real estate broker.
Yeah. I noticed there's another one about real estate brokers in Spokane County. We do have agents over there. I don't work a lot with Spokane agents. But we have loan officers over there that use them. I can get their information for you if you want to reach out to me. I don't do a lot of business in Spokane, maybe 1 or 2 a year. So I think is that about it? Any more? I don't see any more questions there.
Yeah,
And
I think it
again,
was clear, the Q&A.
if something else comes up, let me know by email, or if Nicole can answer any questions for you. We're happy to answer these questions. Again, my information's right here. And I can and Nicole's is in the chat. So I'm happy to answer those questions for you down the road. So thank you for attending. And hopefully this has been informative for everyone.
I think there was one more question. Can
Oh,
the
what's that?
agent charge me if I finish that can't buy? So are you saying if the agent, can the agent charge you if you don't buy anything? The only time that is a scenario in a buyer agency agreement is if you're in agreement with an agent, with a buyer, with a broker, excuse me, and you see a house and you toured it, but you didn't buy it, but you toured it with broker A. You came out of the contract with broker A because it expired or what have you. You went to broker B and bought that property that broker A showed you. Yes, you could be on the hook for paying broker A's commission, because broker A is the one who actually showed you that property, not broker B. And that is a part of the buyer's agency agreement.
But if you don't buy at all, no, they can't.
Yes.
Can't
Yeah.
charge you.
No. If you don't buy at all, no, it's no cost.
Awesome. Well, it doesn't look like we have any more questions, but man, jam-packed full of great advice and awesome information. Like Jeff and Nicole said, their contact information is here. I will be sending out a PDF version of Jeff's slides and along with Nicole's contact information if you guys want to reach out to her. And thank you everybody for your time today. And thank you, Jeff, and thank you, Nicole, for sharing all your awesome knowledge with us.
Thank you for having me.
Thank you. And thank you, Nicole.
Absolutely. Thank you, Jeff. Have a good day, everyone.
Take care, y'all.